BTC announcements can refine risk parameters. Chart increasing with yen total volume market. USDC dominates the 24H volume at $3.29 billion, significantly outpacing ETH at $3.92 million and SOL at $26.31 million. BTC records a volume of $225.54K, indicating diverse market activity. Laptop computer technology ratings. BTC boasts an tech rating exceeding ETH's and SOL's. Lower tech ratings may suggest development risks or limited innovation. Rocket Performance RATINGS, all listed cryptocurrencies BTC, ETH, and SOL receive D or C performance ratings, signaling underperformance relative to established benchmarks. SOL shows marginally better performance. Droplet liquidity analysis. USDC's substantial volume indicates high liquidity, crucial for large transactions and price stability. ETH and SOL offer moderate liquidity, while BTC's liquidity appears comparatively lower. Overall ratings. BTC and ETH have B+ and B overall ratings respectively, suggesting moderate investment potential. SOL receives a D+ rating, indicating higher risk. USDC lacks an overall rating. Warning risk assessment. SOL's lower tech and overall ratings, coupled with a C performance rating, represent a higher risk profile compared to BTC and ETH. USDC's lack of ratings requires additional due diligence. Money bag volume disparity. The massive volume difference between USDC and other cryptocurrencies suggests its primary use as a trading pair or stablecoin for transferring value. This impacts price discovery for other assets. Stopwatch time-based analysis. The 24H volume data offers a snapshot of current market activity, but analyzing volume trends over longer periods weekly, monthly is crucial for identifying sustained shifts in demand. White considerations. The data highlights USDC's dominance in trading volume, while BTC, ETH, and SOL exhibit varied performance and risk profiles. Further analysis should include price movements, market capitalization, and on-chain metrics for a comprehensive assessment. Chart increasing with yen price analysis. Solo currently trades at 0.938, indicating moderate market capitalization and potential for volatility. Droplet trading volume. DOYR exhibits a high 24-hour trading volume of $46.6 million, suggesting strong investor interest despite its low price. Chart increasing ranking and listing. A and B, Franklin and GTBTC occupy lower rankings, with Franklin showing an extremely low price, potentially signaling high risk. Money bag market capitalization. GTBTC displays a substantial price of $92,573.99, indicating significant but potentially concentrated market capitalization. Stopwatch listing date. All projects were recently listed on either 12/09 or 12/10/2025, suggesting a new cohort with limited historical data. Package supply and demand. DOYR's high volume relative to its price indicates strong demand, while Franklin's low price could reflect limited supply or lack of confidence. Warning risk assessment. Franklin's extremely low price and ranking present a high-risk investment opportunity, demanding thorough due diligence. Direct hit strategy considerations. Solo and DOYR show potential based on volume and ranking, warranting further technical and fundamental analysis. White considerations. Based on the provided data, DOYR shows the most immediate trading activity, while GTBTC represents the highest price point and associated risk-reward. Additional analysis should focus on liquidity, on-chain data, and project fundamentals for informed decision-making. Chart increasing with yen price analysis. AIR3 is currently trading at 0.00016, establishing a baseline for short-term trading strategies. Market capitalization. With a market cap of $159.42, AIR3 represents a micro-cap asset, indicating higher volatility and potential for rapid price swings. Droplet liquidity assessment. The liquidity of $38,772.37 suggests moderate ease of entry and exit, but substantial orders could impact price. Shopping cart volume trading. A 24-hour volume of $570.15 indicates limited trading activity, requiring careful order placement to avoid slippage. Chart increasing technical levels. Based on the current price, initial take profit levels could be set at 0.00018 $12.05% gain and 0.0002 $25% gain, contingent on volume confirmation. Warning risk parameters. Given the micro-cap status and low volume, a stop-loss order is crucial, potentially set at 0.00014 $12.05% loss, to mitigate downside risk. Chains TOKNOMICS considerations. Further investigation into the tokenomics of AIR3 is recommended to assess long-term sustainability and potential for value appreciation. Direct hit strategic implications. The combination of low market cap and limited volume presents both opportunities and risks, demanding a nimble and well-defined trading strategy. White considerations. The launch of the first interactive 24/7 LiveStream Market Insight Channel for AIR3 is a positive development, potentially driving increased awareness and demand. However, the success of this initiative hinges on consistent engagement and the delivery of valuable insights. The streaming token aspect suggests a novel approach to market information dissemination, which could attract a niche audience. It's essential to monitor the channel's performance, viewership, engagement to gauge its impact on trading volume and price. Most mentioned ticker on X is $1 chart increasing with yen price action. $1 currently trades at 0.000214, exhibiting a 1-hour increase of 0.94% and a substantial 24-hour gain of 10.89%. Droplet volume and MARKETCAP. $1 trading volume stands at $111.88 million, supporting a market capitalization of $214,000. High volume confirms price movement. Hourglass not done unlock schedule. The next token unlock for $1 is not currently scheduled. This absence impacts potential supply dynamics. Chart increasing recall performance. Recall's price is 0.1132, showing a 0.4% increase in the last hour but a 24-hour decrease of 5.39%. Recall volume in CAP. Recall's volume is $12.94 million with a market capitalization of $81.56 million. Volume indicates moderate interest. First place medal rank advancement. Recall jumped 22 spots in ranking, suggesting increased community attention and potential momentum. White considerations. The data highlights $1 strong short-term price action and volume. Recall shows volatility and ranking improvement. For $1, consider take profits at 0.00023 and 0.00025. For Recall, watch for a break above 12 cents for potential long entry. Chart decreasing fear index trend. The fear index demonstrates a fluctuating pattern over the past week, oscillating between 22 and 27, indicating persistent market anxiety. Chart increasing fear index variability. The range of the fear index spanning 5 points highlights heightened volatility in investor sentiment during the observed period. Stopwatch daily fear index. Daily readings reveal a peak fear level of 27 on December 4th, followed by a slight decline, then a resurgence to 25 on December 5th and 9th, suggesting short-term emotional swings. Fear index average. The average fear index value for the week is approximately 24.14, confirming a predominantly fearful market environment. Warning risk assessment. Consistent fear readings above 20 signal elevated risk aversion among cryptocurrency investors, potentially leading to sell-offs or reduced trading activity. Chains market correlation. The fear index serves as a contrarian indicator. Sustained fear often precedes market bottoms, while diminishing fear may indicate an approaching top. Water wave liquidity implications. Elevated fear can constrict liquidity as investors prioritize capital preservation, widening bid-ask spreads and increasing price slippage. Thinking face sentiment analysis. The prevailing fear suggests a lack of confidence in short-term market direction, necessitating cautious trading strategies and risk management. Light bulb trading opportunities. Fear-driven price dips may present buying opportunities for long-term investors but require careful evaluation of fundamental and technical factors. Direct hit take-profit levels. Based on the fear index trend, consider setting initial take-profit levels at a 5–10% gain from entry points during periods of extreme fear. Subsequent levels can be adjusted based on market momentum. Chart increasing additional take profits. Implement tiered take profit orders at 15%, 25%, and 35% to secure profits at various price levels, mitigating downside risk. Money bag risk-reward ratio. Maintain a minimum risk-reward ratio of 1:2 to ensure profitable trades even with increased market volatility. White heavy check mark quality control. Continuously monitor the fear index alongside other market indicators to validate trading signals and refine risk management strategies.